Good morning, everybody. It's the 26th of August. It's also Friday, which is great news. We're Signal Centre, Talking Bull. I'm Joe, joined by Steve. No Jamie today. He's taking a day off. And yeah, looking forward to the day ahead. Steve, how are you doing today? Oh, no, he's on mute. Muted him. There he is, back in the room.
Yeah, not bad. I'm quite excited now. Because of your quite excited introduction, it was like it got me going. So yeah,
Good.
looking forward to another day in the markets, and yeah, let's see what it'll bring to us. It's a Friday, Joe, as well, and
That
we've got
always
lunch
helps,
today.
right?
We're
Yeah,
at
we have
lunch
got
at
lunch
some
today.
point today.
Yeah,
Yeah, we're allowed
looking
to have
forward to
lunch
that too.
every now and then.
First time this week.
Yeah, that's it.
Just as it's, we've been looking forward to the most high-profile event of the week as well. Probably best, isn't it? If there's going to be volatility, just walk away from the screens, right?
Yeah, just blindfold yourself and shut your eyes and pray.
Yeah. Okay, so let's get stuck into the latest headlines, and we'll get into more detail about what we're talking about and referring to as well. So in terms of the headlines over the last 24 hours, the German Ifo data beat expectation yesterday. It edged lower to a two-year low of 88.5 from a revised figure of 88.7, but it was actually significantly above the consensus forecast of 86.8. So that was pretty good news coming out of Germany. However, the gas fears do continue. There was a further increase in Eurozone gas prices during Thursday, with wholesale electricity prices in continental Europe also surging again, which maintained fears over the outlook. In terms of the US GDP number, for the second quarter, that is still in contraction. It was revised slightly to a minus 0.6 number from the flash reading of minus 0.9 and confirming a second quarterly contraction. Initial jobless claims were out yesterday and they declined slightly to 243,000 in the last week from 245 previously, and again below the consensus forecast, which in this instance was 253,000. The Fed insists there is still no room to relax. Obviously, the Jackson Hole meeting is going on at the minute, where all of these Fed chiefs are together, along with many other high-profile people within the market. The Kansas City Fed President George stated that rates should be increased until there is evidence that inflation is declining and that rates are not restrictive. She also added that it was not out of the question that rates would be pushed above 4%. Although she commented that it's too early to predict what will happen in September, with more important data due to be released soon. The Atlanta head stated that strong data may make another case for a 75 basis point rate hike, with the Fed needing to make sure that inflation is well on the way to the 2% target before taking steps to ease. So today we've got the key speech from the Fed Chair Jerome Powell. He will deliver his keynote speech at the Jackson Hole Symposium at 3 o'clock today. The overall tone of his comments will be more important for expectations surrounding the underlying Fed stance over the next few months, and there'll be choppy trading across asset classes, particularly around that time. There's also been comments from ECB speakers that will be coming throughout the day, and they will be pretty important too. UK retail sales this morning, they posted a strong recovery to a 9-month high of 37 for August from -4 previously, well above the consensus forecast of -8. Retailers also expect solid gains for September, although overall companies were still pessimistic about the outlook. So that's the latest headlines. As we said, it's pretty much all eyes on what Jerome Powell is going to say later today. But we can have a look at how the charts are shaping up ahead of that and what they've done over the last 24 hours and see if we can give you guys any kind of overview of potentially how to set up for the day ahead. So no Jamie today, so we're just going to concentrate on FX indices, cryptos and commodities, and we will get back to our stock coverage as of Monday. Unless there are any specific requests, then feel free to fire them over on the streams if you're watching. Steve, talk us through some price action.
Yeah, Bitcoin we'll start with. Cryptocurrencies, we continue to, I mean, if you look at the weekly chart, it's been a pretty sort of dire week. Look at the range on this. Not very good at all if you're sort of looking for a bit of volatility. We've only had 1,000-point range, similar to what we had probably the week of 1st of August. And after last week's sell-off, there is a little bit of indecision now creeping in. I've been looking from the gun to head trade idea this week to continue to sell this, because there is a large, well, there's two parallel channels we're looking at, these bearish flag formations here. One there, but there's obviously a smaller one here as well. This one on a short-term chart. So, and that the measured move target for that would be a move down towards the swing low at around about 17,600. So I'm still counting the chickens there. I still believe we're going to have a breakdown in this price action. I've shown it on the 4-hour chart in a little bit in a clearer detail. So measured move target down to around about 18,000, 17.6 is the support level. This formation is probably nullified if we get a break and a close above the 22,000 level. So that's the level to watch, really, above resistance there. A break above there still sort of opens up opportunity and a chance to sort of like creep back up to the next sort of like level of resistance, which will probably be around about the 23,200, and above there, that the real major one for me is around about the 29,000 level, and above that 32,000. So they're the main levels to watch in Bitcoin. Looking at commodities, I'll start with gold. Jump out the 4-hour chart, just look at the, well, have a look at the weekly as well. This bearish engulfing on the weekly, was it, you know, we expected it to lead to further negative price action. It did for a while, got down to 17.28, but has rallied over the last couple of days and looking a little bit more positive. 17.65 resistance there, that's the high of the week. Above that, we've got resistance at 17.75 and 85. The downward trending, the bearish channel, the downward trending line above comes in at 17.80. And also above that, we've got 1807 above the psychological 1800 level. As I say, 1728 is the support below. The major support in this market comes in the form of this channel or this range of support that we see down around about the 1678 level in gold. Still potential for further downside, but we've had 3 positive days of price action, although yesterday afternoon we sort of like stalled and reversed quite sharply, got up to 1765 here, and then we had the reversal. So on a short-term basis, this looks potentially to be some sort of head and shoulders formation. Can we draw a head and shoulders? We can draw it here down to here. That's the start of the neckline, the head up here, and we could actually see that this could be the right shoulder here. So if we do manage to get a break below the 1750 level, it could open up a little bit of a long squeeze out to down to around about the 1742. Measured move target for this move, we'd sort of, if this plays out, remember, if it plays out, it has to break the neckline to be considered a valid formation. If it plays out, we could get a move back down to 1737, which is still above this week's low. On silver, similar sort of price action. Again, if we look at it, it sort of reminds me a little bit of what we're seeing in the crypto world, a little bit of a flag formation, bearish flag formation. Topped out yesterday, got up to 1940 on here, and back down, then was thrown back down to support. That comes in the form of 1911. Again, we sort of like, if we get a break of this upward trending support line, might see a little bit of further downside, really based on what we're going to see out of Jackson Hole. Obviously, there's going to be a lot of volatility in these dollar-based assets, so be careful out there. Copper continues to grind higher. I'm sure I was looking at buy trade idea, but it's I think may have got stopped out at some point. But I talked about this quite a bit. These levels that we're looking at in copper are quite key. Let's look at the weekly chart to give an idea. We're getting up to the highest levels we've seen since the week of 27th of June, and really no sign of this slowing down. And again, it's a dollar-based asset, so you know, even when dollar strengthens, this has continued to sort of like buck the trend of just being driven by the dollar. So there's more to copper. Obviously, it's got a more industrial use than maybe gold and silver. So looking at crude oil, we saw a nice little rally in crude oil over the last week. However, yesterday wasn't great. Price action made a new high from the previous day, got to resistance 95.54 and completely engulfed yesterday's or the previous day's price action. So that's a bearish outside candle. That doesn't look too pretty in my eyes. Now, the level of support it bounced from was around about the 92.27, which was a previous swing low. So that's a little bit of a pivotal area. Still on the front foot, but if we do get a break of the $92 level today, then I wouldn't be surprised if this has a bit of a continuation lower. Again, remember, it's sort of like priced in dollars, so we should see some reaction anyway, just naturally. So resistance above 95.50, 92 below, a break of that range, and we should see some sort of extension. Again, the price action yesterday, bearish outside candle in Brent crude oil as well. The levels to watch there, obviously the high from yesterday around about 101.50. The low may be a little bit more significant because we are in this overall bearish channel move downwards. 98.20 that comes in at. So a break and a close below there, maybe further downside to retest the 91 level. Natural gas is hanging about these recent highs. We did have a bearish flag, bearish dark cloud, I suppose you could call it, maybe on the 23rd. Since then, indecision really, but mildly bullish. We really sort of like seem to be magnetized to this this level just below $10, $9.97 I think we got up to. Support coming in around about 8.87 now. So really looking for, overall, this looks like we are just primed for an extension higher, I think. But until we break that resistance, and it could be, you could sort of like lodge it at $10, around about there. Close above $10, get excited about the up move. Otherwise, really watch that 8.87 level below, a break of there, and we're back into the mire. That's about it from me, Joe, I think.
Cracking roundup. Thank you very much, Steve. So let's take a look at the US dollar, because as Steve mentioned, it is very crucial to a lot of those commodities as they're all priced in US dollars and can have a pretty significant say in things. So we posted a bearish day yesterday, but we certainly closed well off of the worst levels. Overall, the trend remains very bullish. There's no denying that. We did have a corrective channel that played out here, as you can see, that's been contained within these blue bands. We saw a very impulsive breakout to the upside, and then prices went on to challenge these highs that we posted back in July. We did fail at that level initially and pulled back, and then we saw some indecision, and we continue to see that really. So there is potential for this to slow things down and create some sort of top in the short term. But overall, the trend does remain so strong. So I'm not really getting too excited about the thought of a top on this just at this stage. We're on the front foot today, up by 0.22% as things stand. There are quite a number of levels that we need to break through really to get this going on the upside. We're already close to 17-year highs on the dollar index, but a break above the highs at 109.29. We then face resistance at 109.72, then 110.25, then 111.31. But above that, I mean, it's clear air really, and we could see prices continue to move higher. Obviously, the Jackson Hole speeches that today that we're going to see, they are likely to create some volatility in the dollar index. But I don't think we're going to see any drastic change in the messaging from the Fed in particular. So therefore, we may just continue to see more of the same in the dollar index, and that is for it to ultimately continue moving higher. So we take a look at Euro USD. That broke down to new lows earlier in the week before posting some sort of small recovery, I suppose. It still looks fairly undecided. I mean, given that it is at 17-year lows, if we were to see any sort of turnaround, you would have hoped that it would be really quite a significant one if it's being well backed by the speculators. Doesn't really appear to be the case. So yesterday we rallied into this level here, which is parity, funnily enough. So not really a technical level as such, more of a psychological one. But on the retest of that parity level, we have seen sellers step back in. We posted really a bit of a shooting star candle yesterday into that. And prices failed to continue moving higher. So seems like it's still on the back foot, down by 0.18% as things stand. If we take out the low that we posted on the 23rd of August, then no real sign of that slowing down. The next major target from a technical perspective is actually down at 95.95. So really suggesting some quite significant downside still on Euro USD. And as you can see, if we scroll back to the left, the trend remains pretty awful, and no signs of it slowing anytime soon. Take a look at cable. That managed to hold support quite nicely and continues to do so at 117.60-ish. So we saw a nice engulfing candle post on the 23rd, but no real follow through to the upside. Price is very range bound, which has meant there's been limited opportunities on that for trading purposes. So if you are speculating on that, then I think hold firm and have your stops below that low that we posted on the 23rd, and looking for maybe a move up as high as 1.2000. If this low gets taken out, then we're looking for a continuation lower, quite simply. And the next major level on the downside is down at 114.10. So potentially things could really heat up on the downside if these levels break. Let's take a look elsewhere. I mean, Euro continues to get a bit of a battering, to be honest. It looks to be the weakest of the currencies at the moment. This is Euro Oz. We saw that break down again yesterday below key support at 143.20. Retesting that as things stand at the moment. So from a technical perspective, a retest of a newly formed resistance could be a decent opportunity for entry. So that may be one I consider actually for the gun to the head. Euro CAD breaking down to new lows, no signs of that slowing at all. Euro Swiss continues to be one of the strongest downtrends. That was one that we looked at yesterday on the intraday basis for a sell and worked out quite nicely. Euro Sterling, these two are kind of cancelling each other out. I mean, Euro ultimately remains more weaker than Sterling, I think, at the moment, but a lot of sideways price action going on here. I've drawn on a head and shoulders, but not convinced that's going to do an awful lot. So we've rallied into a 38.2% fib level here, which has stalled the price action, and ultimately still looking for lower prices on that, I think. I'm going to move it on to the indices now, unless there are any other specific requests. We can jump back to FX if we need to.
Yeah, I was going to say Tesla, so I can cover that after the indices.
Yeah, okay, cool. So Aussie 200, that rallied into resistance today at 71.34, just from these previous highs that we posted a little earlier in August. We've hit the high and we have retreated a little bit. So maybe that could be a sign that there isn't enough appetite to continue pushing this higher, and we're just going to come up shy of this 61.8% fib level. All in all, not really an awful lot has changed on the indices. They are still in well, chopping around really. We saw a decent pullback in DAX. It pulled up just in front of a support of 13,025. We've seen 3 consecutive days of green so far, assuming today closes green. Of course, it's pretty dangerous to make that assumption just at this stage because there's so long left in the trading session. So we'll wait and see what happens there. But in terms of my general feel, I'd be going with the longer term outlook here, and it remains bearish for me, still trading in a sequence of lower highs. Let's take a look at Nasdaq. I'm still looking for this to try and fill the gap that we created on the daily chart at 13,243. That kind of marries up with this downtrend line as well, although we did overshoot it a little bit earlier in the month. But we've got this gap on the chart. It needs to be filled. And typically when gaps get filled, they can present decent opportunities as a technical analyst to try and trade into those gaps, expecting the price to continue moving in the direction that the gap was created. So in this instance, looking for a continued move lower. S&P 500. I drew this on yesterday. Potential for an inverse head and shoulders maybe. It's pulled back nicely to a minor support at 4106. We posted a decent green day yesterday. We've got resistance up here at 43.27. Now, if we can take that out, then maybe we have formed an inverse head and shoulders bottom and we can expect higher prices over the short to medium term. It's all ifs and buts at the minute. I wouldn't be wanting to confirm that as being bullish unless we can break above those highs at 41.25. So in a holding pattern for that at the moment. Look at the Dow. Again, maybe potential for an inverse head and shoulders. I drew on this risk reward ratio. This is the measured move of the potential inverse head and shoulders, which is all the way up at 38,900 ish, which offers maybe a 10-to-1 return if you're brave enough to have a go at it. But it is very preemptive. It hasn't broken yet. It would need to get above 34,295 in order to complete that. But just the backdrop of the economy, obviously the contraction yesterday in the GDP and the speeches today, I'm not entirely convinced. I mean, overall, we still, I think, remain in a downtrend here. There is still a fairly prominent sequence of lower highs that we need to be aware of. So, yeah, could be very pivotal in this region. If it can break up, then I'm prepared to change my view. But for now, I'm very cautious on that. Ftse still remains a terrible market to trade just because it doesn't seem to really go anywhere. It's still got a minor sequence of lower highs. We broke down through this short-term uptrend, but we're getting a lot of mixed signals on this one at the moment. We saw a big move down towards 74.10 a few days ago, but then we reversed that to close pretty much where we opened. Yesterday, full of indecision, posting a doji candle. Today we are a little higher, but obviously we've got some fairly volatile events ahead. So do be careful if that is on your hit list today. Okay, that'll do from me on the indices. Steve is saying we've got some requests for Tesla.
Yeah, just a request for Tesla, and Ryan asking about are we familiar with dominance chart with cryptocurrencies? I presume you mean that basically Bitcoin is the dominant dominant asset within the cryptocurrency space, and so you can measure other alternative coins' performance against how it performs against Bitcoin. You can get the similar types of market leaders in the different asset classes, and also in the different variations of market within those asset classes. So if you look at stocks, you might be looking at electric vehicles. So you look at the most dominant electric vehicle company, maybe would be Tesla, although it does a lot more than that, obviously. And yeah, you can sort of like market performance. So you just look for the sort of like the most traded, most valuable asset within each category to sort of like then you can mark how the others are performing. A lot of the time you sort of like see if there are markets that are in the same, or other sort of companies that are in the same class as Tesla. Sometimes Tesla has the big move and then the others follow. So that's what I suppose we see as a dominant market.
Yeah, I think in terms of dominance, I mean, I think you refer to Bitcoin and how dominant that is in terms of overall volume in the cryptocurrency space, which over the past 24 hours is about 40%. I'd need to look back at charts beyond that to see, how relevant that chart is. But I guess when we're fueled with speculation in the markets and there's a good feeling towards cryptocurrencies and they're in a bull run, then maybe you'll see Bitcoin dominance being less because people will be chasing the altcoins. And
Yeah.
if obviously we're in a phase where people are a bit concerned, then maybe they will flock back to the the biggest name, which would be Bitcoin as a measure of safety.
Yeah, absolutely. So just someone asked us to look at Tesla. So I'm just basically looking at a daily chart on Tesla, just recapping what we've seen in this. Obviously, we've just had a stock split. So you might be waking up this morning or whenever it happened yesterday, maybe, and thinking Tesla's dropped from 900 to 300. Oh my God, I've lost all my money. But no, that's not the case. You've got another couple of shares to go along with the one you had before. So it's a 3-for-1 stock split. So the price now has moved down. It makes it a little bit more affordable for the retail market to own a share of Tesla. But yeah, thankfully the prices are adjusted in the charts, so we can sort of still see the same chart patterns that we were seeing before. So the couple of formations.
So your arbitrage trade didn't work out yesterday then?
No, I sold it at 900 and I've just, yeah, didn't work, mate.
Got the same me.
So yeah, just the dominant formations, dominant levels to watch really in Tesla. And I'll take a little look at the Acuity Trading News sentiment analysis as well, which can give you an indication of what the sentiment is like towards Tesla. So the overriding formation, you've got the all-time high now up at around 414. This is lower highs posted, so there is a downward trending overall overriding market at the moment on the long-term basis. On the shorter-term basis, we've seen a really nice rally since the 16th of June. Drawing a Fibonacci retracement line from the last swing high peak to the low, we get a nice 61.8% fib, which is a normal market correction that we expect in markets. So this is just a normal market correction, nothing special. That's what markets do. We saw a double bottom here, which played out really nicely. The measured move target would be maybe slightly higher than we are now. Shall I measure it? Yeah, let's measure it, Steve. So yeah, this would be the measured move target, would be take the neckline, break. Yeah, so it'd be slightly higher. That was it, 336. So that's the measured move target of that double bottom. However, just recently we formed a potential double top. Now the neckline for this is at 279, a break of 279, and again that will create the same sort of opportunity on the downside, a measured move down towards, I don't think the line printed properly, but around about 245, 250. That would be the downside target if we did get a break and a close below 279. So look out for that. In the meantime, this looks maybe like a bit of an impulsive move higher. Looks like we're in this is the fourth wave correction, maybe before we see a fifth and final wave. So it's really a case of looking for the break of either the resistance. If we get a break of that resistance, I'd expect to see a further drive higher towards a 337, 350 level, maybe up as high as the 364, or maybe stalling just in front of there. And if we don't, maybe the impulsive move has this as the fourth wave here. This would be the fifth wave correction. We get a breakdown maybe before we get a drive lower. So two levels to watch: 280, 316, break of either side. Otherwise, just trading in the middle, leave it alone while it's trading in the middle. Not a lot to gain from that. And really sort of like, you know, if you're bearish towards it over the longer term, getting up towards 314, a decent place to sell, or selling a break of 280. If you're bullish, obviously buying a break of 316. Looking at Acuity, I've just brought up Tesla Motors. Last 24 hours, 100% positive on the news sentiment towards Tesla. Obviously, we can see the chart here, how news sentiment has been negative and turned lower around about the 21st of August, and has been negative since. And we obviously got a big drop off in that negativity, and obviously the prices can show here where the price was trading yesterday and today, so that there's a big difference in price. As I say, most charts, most trading charts or analytic charts we look at will account for that change in price. The most recent news sentiment idea plotted a sell trade idea, 50%. Daily news sentiment moving low, and 50% of the last 10 currencies price has fallen within 1 day. And yeah, it did. But yeah, for different reasons other than the actual a move in the market. It was the stock split that did that. So that's about it on Tesla.
Cool, thanks, Steve. Okay, so let's move on to the gun to the head trades. Only two of us today, of course, but each trading session, the participants on the video pick a trade idea that they think can work between now and 9 o'clock UK time. So that's when the trade ideas will be closed, or of course, if they hit the stops or the targets before that. All the ideas that we publish must have a stop and a target, and if you want to check them out, then please feel free to do so. You'll find them on our TradingView profile, Signal_Center, and we publish them up live for you all to check out. So yesterday we had 3 trades. Jamie was selling Litecoin into some resistance that he'd highlighted there on the 4-hour chart. I think we did see an initial move lower, which was nice, but I think at the 9 o'clock close, he was actually slightly offside. But if anybody did persist with that, or followed him on that, you should be nicely on side as things stand. So nice call there from Jamie. Steve, you went long of natural gas, and from what I saw, desperately unlucky. It looks like you were just pipped out on that one.
Yeah, little spike down lower. Someone got excited, pressed the sell button, stopped me out. It feels like a conspiracy, Joe.
direction wise, obviously spot on and nicely called, but that is the game. Unfortunately, sometimes you can get stopped out, even though your ultimate call on the direction was the right one. And we also had a trade on Euro Swiss, a really nice downtrend on this one. And as I've mentioned a couple of times, I think it's probably one of the most persistent downtrends around in the FX space at the moment. And this one worked out quite nicely, 0.77 R on side at the 9 o'clock close. So decent-ish day, I suppose, yesterday. Always room for improvement. So we're going to try and pick two new ideas today and see if we can find something interesting. I've got one ready, Steve, so I'll give you a couple of minutes to find something. I'm looking at Ethereum today, and just taking a look at the daily charts. So ultimately we're in a downtrend. I think we've got a large top pattern here that formed on Ethereum. We saw a very decent breakdown. We saw a short-term bottom form here. We had a measured move target up here at 1682 and an extension of that at 1930. Pretty much got to that very nicely indeed. But it looks as though on the daily chart we are starting to maybe form some sort of top here. The price action seems to be rounding a bit here, which is what you look for when you're trying to call tops. Maybe a little bit premature, but also we can maybe make out some sort of some head and shoulders top here, this being the left shoulder, this being the neckline, this being the head, maybe in the process of forming a right shoulder here. So if we get a breakdown, that could lead to further downside in Ethereum. In terms of how the candles are shaping up right now, just remove that. We are engulfing all of yesterday's gains, so that also could be a negative sign. Looking at it from an intraday perspective, this is the hourly chart. We've posted a decent corrective channel here. We've broken down below that. Again, got this kind of rounding formation that appears to be forming on the intraday basis. We've broken down through support here at 1671, so I'm going to bank on a continuation lower in price in Ethereum. Currently trading at 1652, so that's my entry. I'm going to target and move down to these swing lows roughly in this kind of region here at 1534 is my target, and I've got a stop loss at 1695. So looking for a 2.78 risk reward ratio on Ethereum today, and I'll get that published up to our profile momentarily.
Nice one.
Over to you, Steve.
Okay, I'm going to look at crude oil. Despite the sort of like rally we've seen this week, we posted a negative candle yesterday. After breaking out at the channel, it's a bearish outside candle on the daily chart. That's not good. So I'm going with the more of the shorter term price action. And on let me just get this right. Adjust it slightly. Looking at a bit of a bearish flag. Here we go. Let me just draw this bearish flag in. You know how I like flags. Looking at a bearish flag here, and also there's a bit of maybe a head and shoulders formation taking place, which could mean we get a little bit more of a squeeze higher before this comes off. Hopefully my trade will hold in and the stop won't get triggered like it did yesterday. So selling crude oil at WTI crude oil at 93.30. The stop would be $1, 94.30, and the target is $3.50, 3.5 to 1 risk reward. That's down at the 61.8% fib, 89.80. That's the target.
So Steve will get that posted up shortly as well. So if anybody wants to follow the progress of that, feel free to do so. I just would reiterate that these gun to the head ideas are just intended to be a bit of fun. Obviously, we are coming up with them pretty much on the spot. Sometimes they work, sometimes they don't. Overall, the track record's been pretty good so far. But obviously, any trades you take are very much at your own risk. So bear that in mind. In terms of the day ahead, as we have alluded to on a couple of occasions throughout the video today, there is some high impact events today that we can expect. We've got the US PCE prices index at 1:30 UK time, but all eyes really are on the Fed Chair Powell speech, which is expected around 3 o'clock today. So this is day 2 of the Jackson Hole Symposium. There are other speakers as well throughout the trading session. We are expecting some comments from ECB speakers, so we could see some volatility in anything linked to the euro or the euro indices. So do be on your guard. Do be aware that these events are occurring. If you can follow any commentary somehow, places like Twitter are generally very good for giving you instant updates on this kind of thing. Or of course, there are many other news outlets that will be covering it as well. So do be aware of them. Do use appropriate risk management. You don't want to be getting caught the wrong side of things going into a weekend, because you'll spend the next 2 days worrying about it. It's also a bank holiday in the UK, so we won't be here on Monday. We get a nice 3-day weekend, Steve.
Hey,
So
forgot about that.
yeah, I think that's pretty much it. We can wrap it up there, and wish you all a lovely weekend.
Cheers.
See you later. Bye bye.